All right, what's going on, everyone? This is Eric here again with Traveling Trading. Here doing another quick video for you guys here. We're going to talk about Bollinger Bands today. I'm going to get straight into it. I had a lot of traders and new traders ask me about it to do like a quick video on it, just kind of breaking it down a little bit. So that's what we're going to cover here today. So you guys can kind of get a little, idea of how to use it and stuff like that. And then, of course, for those of you that are watching this video, in the course, stuff like that, we'll go over different strategies within it and just kind of talk a little bit more about it. And I'll show you guys some pointers and tips and tricks when it comes to it. I'll show you different strategies and things like that when it comes to Bollinger Bands. So let's go ahead and get into this here and, get to learning. All right, this would be a fairly quick video. If you guys do me a favor, if you can, like, comment this video, share it with someone, that'd be great. Or anytime you think, you hear somebody ask about Bollinger Bands or entries and exits and stuff like that, show them this video. It'll greatly be appreciated. All right, so let's go ahead and get it started. So Bollinger Bands. Let's talk about our objective today. So what I wanted to do here is pretty much cover what Bollinger Bands are for you guys. I want to go over how they work. I'll go over how to use them. I'll go over different problems and mistakes to avoid with them, and then I'll cover how to use them in combination with other things to your advantage to help you trade better within the market. Okay. So first and foremost, what are Bollinger Bands? So Bollinger Bands is basically an indicator that was invented by John Bollinger in like the 1980s, I believe it was like a little bit before I was born. But basically, it was used to be able to determine different buy points and sell points in the stock and be able to tell when they're probably going to be making a bigger move. Okay. So basically, what it is a trend indicator, and what it does is it detects volatility and dynamics of the price of a security within the market. Okay. The indicator itself is, plotted on the chart to help you be able to identify, key areas that are important for many traders. All right. So you'll see a lot of traders who use Bollinger Bands, for whatever strategy they're using. And the indicator is typically made up of three parts. Okay. There's an upper band, middle band, and a lower band. All right. So the middle band itself is typically the 20 EMA, the 20 moving average. The lower band is going to be is a standard deviation away from the moving average, typically two, and we'll go into that a little bit, more detail here in a second. And of course, the upper band is usually two away, standard deviation away from the moving average as well. Okay, so you see here, moving average, upper band, lower band, and again, it's two standard deviations away typically when using an indicator. The bands, they have dynamic support and resistance, which basically means that as the price is moving, so do the bands, okay? So keep that in mind. And of course, the mathematical calculations, just like almost any other indicator, can be changed. It doesn't have to be the 20 EMA. You can change it to whatever you want. It doesn't have to be two standard deviations away. It could be, something different if you want to change it. But that's up to you as a trader, how you want to do it. I'm just kind of giving you guys the default format for it whenever you decide to implement it. So one of the major questions, of course, is how does it work? Well, mathematically, what happens is it uses the standard deviations to measure how far a stock price has moved away from its average, or AKA its typical price. Okay. So like I was saying earlier, you'll typically have, one standard deviation, two standard deviations, and three standard deviations. Okay. And I'll break those down for you here in a second. So basically, one standard deviation is typically when the price is a little bit higher or lower than the moving average, and this typically happens frequently. So let's say, for example, this middle line right here was the, price of, you know, $1. The bands will have standard deviation of one when the price is, 68% from that standard, from that price from that price value of $1. Okay. Standard deviation two, which is typically what you'll see within the bands on the default indicator, is usually the 95%. And that's when it's a lot higher or lower than the average. And this happens on occasion. So, you see the price within, two standard deviations of the band. That's usually, where the price is 95% of the time. Okay. And that's S2. And then there's S3, which is the standard deviation where it's a whole lot higher or lower than the average. And this rarely happens. Okay. So that's S3. And again, you'll see different levels, of the bands based on, how you set the price of it. Okay. So the stock price will usually stay within those standard deviations of that percentage of that time. If the price is, like I said in the middle here, let's say if this was $5 and it moves, so does the standard deviation. So like for example here, if you see the price within that time frame, if it's moving, so will the price. Okay. Now just because something is out of the standard deviation and it's away from the moving average, doesn't necessarily mean that is going to reverse. Okay, as you can see here in this example. So the red line here is a simple moving average. This is the lower band, this is the upper band. Now, just because this price action is moving to the upper band doesn't mean that it's about to reverse back down to the lower band and stay within that standard deviation. It could still continue to go up and up and up, as you can see here. All right. So don't fall into that trap. Bollinger Bands, what they do is they help identify trend reversals, large volatility. They help, identify breakouts. They help you find periods of consolidation, and they also help you find potential price targets. It's a very versatile indicator. When used correctly, you can, be very profitable with it. Okay. Um, and like I said, we'll break this down a little bit more, but this just kind of give you the general gist of it. Don't worry about the mathematics of it, the 95%, 99%, 68%. All that's calculated within the indicator. You just need to be able to recognize that, hey, when it's in the upper band, what that's telling you, when it's in the lower band, what that's telling you, when it's, consolidating along the moving average, what that's telling you, and things like that. Whenever there's low volatility, that means the bands will then tighten and contract. And of course, when it's high volatility, they'll expand. Okay, so that's kind of the key thing to recognize with that. So as you can see, like in this area, for this little time frame here, the bands are beginning to contract, which means the price is staying within this little range here. Now, after a period of time, the bands are starting to expand. As you can see here, it's getting larger and larger. And of course, the price is moving. All right. And of course, before that, it was the same thing as well, too. So that's just kind of showing you the volatility there. All right. Now let's talk about one of the, main trading strategies that a lot of traders use with the Bollinger Bands, and it's called the Bollinger Band squeeze. Basically, like I said before, when volatility is shrinking, the bands get tighter and tighter. And therefore, once it squeezes, it's possible that a big move is going to happen. It could either be to the upside or to the downside. Okay. And, obviously you want to look at the overall trend just to kind of get that confirmation, to look at that. Okay. So like, let's say, for example, here, as you can see, the bands are contracting. It's not really much fluctuation coming here within the price. And here it's getting even tighter and tighter and tighter than it was previously, as you can see here. So as these bands are, starting to contract and the bands are starting to squeeze, you as a trader can start to, identify, hey, then a potential next move that's coming up can be either a big one up or a big one down. Okay. Um, as you see here in this instance, this was a big sell-off. As the bands began to attract, price, expand, the price then dropped and pulled the price all the way down. It went below VWAP and it just became bearish on after that. Okay. So that's kind of a good example there. Whereas, you got this indication here of the bands breaking below the volume weighted average price, and you can see it expanding. That's a good indication that, hey, price is going to continue to drop, and of course, it sure did. Okay, so that's just one example. So some of the problems that comes with the Bollinger Bands is you can get a lot of false indications. Understand, because this is a trend indicator, Bollinger Bands is not going to be, the overall trend. Okay, so don't just blindly short the bands just because they're high, or don't just blindly, buy when they're, at the lower end of the band. Okay, they can continue to do the opposite. So a lot of false indications can happen, especially if you haven't had practice in reading the Bollinger Bands thoroughly. Okay. Another problem with it is the time length. Squeezes can last for a long time. When a consolidation begins to happen to the price, you never know how long that consolidation period is going to last. Okay, so that's one of the problems that a lot of traders find, um, when it comes to utilizing the bands. And of course, another problem is that it is a lagging indicator. Now, even though it's dynamic and it fluctuates with the price, and takes market data, unfortunately, it is a lagging indicator, not a leading indicator. And so there's no way to kind of be able to tell the tops and the bottoms on just the indicator alone. Okay. So obviously you want to use it in combination with other things. Now, some of the things I recommend, in my opinion, would be a good combination with it. Obviously, would be, using the volume weighted average price, having another trend indicator just to kind of confirm what you're seeing, and also some isolators. It could be different ones there. So I would say, simply, obviously, you're using the 20 simple moving average within the Bollinger Bands. Of course, when it crosses, that means the trend is, typically starting to trade in that direction. So using an indicator such as the VWAP with that will help you, gain that confidence and, confirmation of a bullish or bearish move. Bollinger Bands with isolator is a really good isolator to use with it. It's good for timing entries and exits. And again, we're going to cover that, in the strategies and stuff like that here. Um, and, get you some more ideas of what to look for when it comes to that. And like I said, isolators like relative strength index works well with it as too. And there's also a few more combinations. Like I said, we'll go into more detail. But obviously, you don't want to just use the Bollinger Bands indicator alone. Combine it with other things to help give you confirmation. That's what a lot of videos that go over the Bollinger Bands fail to mention, that I've seen for a lot of people and a lot of traders don't realize. They forget that you also need to use other combinations with it, not just this indicator alone. So hopefully that helps you out there. All right. All right, guys. So that pretty much kind of is a quick crash, course on the Bollinger Bands. You now know what they are, who made them, what they do, how they work, how to use them, you know what problems to avoid, and you know how to use them to your advantage by combining them with different indicators and isolators. All right. So, guys, I hope you enjoyed this video, this little quick intro into, Bollinger Bands for those of you that are watching it on, on the channel and stuff like that. And again, those of you that are watching this in the course, get ready because we're going to go into a little bit more details with this. And, we're going to touch on things like, whether or not you should be using the indicators in certain types of trades. We're going to touch on the different strategies to use, what's centered around and how to use them, how to profit from them. We're going to cover, my favorite strategy that I like with the Bollinger Bands. When I was using it, I don't really use the indicator that much more, but when I was using it as a beginning trader, these are some of the things that I looked for. And we'll just cover a lot more stuff. So just kind of stay tuned for that. This video might be a little bit longer than that, but for those of you that are watching on the YouTube channel, hope you enjoyed it. And, comment below if you have any questions. All right, stay green. All right, guys, just wanted to show you some quick examples here of using the Bollinger Bands. So you can kind of see here, and obviously this is real time. I can't, speed this up anymore. Just wanted to kind of recap one of the trades that was, pretty much being utilized today. This is STS or STSS. As you can see here in pre-market, it spiked up on news. And at that point, it's at the upper end of the Bollinger Bands. And then it began to, pull back and contract. And as this is happening, you can see that the bands here are expanding. Now, typically, again, with the expansion of the bands, that's indicating, price, being out of the norm. And knowing that you have momentum on your side during this point, this is a good area where you'd be able to start to plot support and resistance. And again, you'd want to combine this with, indicators and isolators that might help you out. Obviously, we have the VWAP here. You can use other indicators such as like the MACD, like I said, RSI, and et cetera, whatever might help you out, but not too many to get conflicting signals. But just, things that are ones that are there to help you out. But mainly what you want to focus on here, aside from the expansion, is the consolidation areas. And as you can see here, the bands, begin to consolidate after that huge run up. It begins to consolidate and consolidate. And this is, at this point, giving you a signal that price, action is, starting to light up. And of course, this is pre-market here. So, with this being one of the leading pre-market, stocks, this contraction here is already kind of anticipated. All right. And obviously it breaks down to the VWAP and then, begins to fade off. So what you also want to focus in on again as well too here is opening bell. Again, beginning of pre-market, opening bell, like I tell you guys all the time, is very, very key areas. So here's where it kind of gets interesting. This is already on your radar, right? Because of the price action that's happened. Whether you're in the trade or not in the trade, depending on your broker, if you had opportunity to trade it, you still want to watch it during open the bell because it's one of the leading volume stocks. Of course, with the news being a catalyst, that's something to, consider as well too. But anyways, just kind of focusing on price action alone, you can see here that as the bands are consolidating, you know, within pre-market, a good indication here, opening bell, the price action starts to run up, the bands are starting to expand, and this is giving you a key signal that bullish activity is happening. The same thing would happen if this was a bearish move as well too. You can see that the price action is moving outside the bands, being outside the means and reaching different areas of standard deviation. Now, also too, note that you have the volume weighted average price here and the simple moving average here as well too. Um, Along with whatever other indicators you might want to have that's giving you a bullish signal. But basically, price, crossing above the volume weighted average price is usually a bullish signal for most traders, which of course this becomes a self-fulfilling prophecy because, other traders are seeing it as well, and the price begins to spike up. So that's a good indication there um, of utilizing the Bollinger Bands as more confirmation for, signaling price direction of different securities that you're looking at. And again, as the price action moves up and the support area becomes to show right here, it then begins to consolidate. And this is very, very important because as it's consolidating, what should you expect? Either a break up or a breakdown within the stock, but you know what's coming because of the price action. And obviously, like I tell you guys all the time, it's better to be, you know, reactive than try to be proactive because the stock can go either way. It's better to get a confirmation of where it's going to, move and then trade within that direction of that trend. So as you can see here, as it consolidated, it finally gave you some confirmation here as it broke the volume weighted average price and the bands began to expand at that same point in time. So at this point here, you can expect, okay, this thing is going to fall. And as you can see here, it did. And it's continuously contracting, contracting, contracting. Then you got another little confirmation here as it breaks, below the simple moving average here. And it's continuing to fall here. Okay. So as you can kind of see there, that's like a quick example of going from bullish to bearish using the Bollinger Bands. Let's take a quick look at another one here. We'll take a look at SEV, I'm sorry. This thing pretty much had a little bit of news come a little bit late afternoon, but it was consolidated for the most part. And obviously, you wouldn't get no notification to look at the stock until it does something like break a new high or some news came out, using the alerts and stuff like that. But once you got that and you pull the stock up here and you look at the actual stock itself, you're going to then look for the, bullish indications or bearish indications that fit your trading strategy. Here at this point, the stock was halted a little bit a couple of times. I do believe I won't go into the time frame it was. You can go back and check during the time frames of this date when it was halted. But you had a lot of bullish signals here. Most people when you play the Bollinger Bands, probably at this point, let's say if you were playing from here, you would expect some pullback to happen. However, you're getting more confirmation that it's still staying bullish. You can either then reverse your position or take the long position here at this point. And you got a lot of signal here between the candlesticks and other indicators along with the bands, and the price being outside of the bands is letting you know that hey, this is a big bullish move. Yeah, this candle might trip you up a little bit and you might expect some pullback. Obviously, you're going to be using other isolators and stuff like that with it. And this is a bearish engulfing candle. But at the same time, it's still in bullish territory. So that's obviously a natural dip, natural pullback, and we mentioned that in the chat room. And it continued to ride on up. Then it happened again here, and it continued to ride on up, and it happens again here. Now it's at this point probably you'd want to take your profits or whatever your strategy is. And then as you can see here, it's going to begin to contract a little bit, and the bands are just kind of giving that little bit more of a confirmation that it's staying within that level of support there. Then it crosses again. As it consolidates, you have it cross, and it pops up, breaks out of the bands, more price action outside of the bands, which means this thing is going to continuously gather momentum. And as you can see, it pretty much did. Okay. So that's another good thing, about using the Bollinger Bands. Usually when you're seeing that price action come out of the Bollinger Band is giving you a good signal of momentum heading in that direction, or letting you know where trends are going to be, turning or reversing, et cetera, et cetera. It's a lot you can kind of tell from the bands, okay? And you can, put that into practice and you'll start to see it more and more. So obviously at this point, here we are right now. It contracted some right here. Price action didn't budge much. Now it's starting to pull back and it's getting into bearish territory. I can imagine that for the rest of the day, this thing will start to, you know, pull back some more until it probably breaks, you know, especially if it breaks this level of support here between this range. And it's already starting to do that. So that's pretty much the simplest way to kind of utilize the Bollinger Bands to your advantage. Hope this video helps, gives you guys an example. Um, you know, there's a lot more videos out there on Bollinger Bands that might, you know, be a little bit more conducive or just kind of give you a different perspective on it. I was just trying to give you guys a quick little crash course, you know, example of it and how to utilize it. Okay, so hopefully this part of the video helped you as well too. All right.
All right, guys, that's pretty much it. So hope you enjoyed this little crash course introduction into Bollinger Bands. Hopefully you learned a little bit more. Obviously, there's a lot of information out there about it. You can look at other videos and things like that just to help sharpen your perspective on it and see if it's an indicator that you might want to use. So I definitely encourage that. If you can do me a favor and just, you know, hit the thumbs up button, comment, subscribe, let me know your thoughts about this. Hopefully, like I said, you learned a little bit more. Obviously, if you're watching this video in the advanced course, I cover, you know, a whole nother 25 minutes of different strategies and what to look out for, how to approach utilizing the Bollinger Bands to your best advantage. And we just talk about different combinations and things like that, you know, just to expand your knowledge and, you know, help you with taking your trading to the next level if you're, you know, utilizing Bollinger Bands or interested in using it. So if you want to check that out, the links are below as well too. If you're interested in joining our free group, click the links below. We talk about stocks all the time. Be more than happy to help you guys out. You know, we just want to help the trading community grow. So enjoy this video, look out for more, and until then, stay green.